morning, everybody. This is Live Trading Talk with Patrick MontesDeOca for November 24th, 2021. We're taking a look at the radar screen. Pretty quiet morning so far. Gold is down $2.30, 1781.82. Silver is up 7.5 cents. Copper is up about 3.5 cents. And we continue to see a little bit of a sell-off on digital currencies, down about 2-3% for Bitcoin. Let's keep an eye on here the first few minutes of the opening here and see what the data looks like for today's trading session. Just a couple of notes here regarding some economic news that came out. US jobless data came out, the lowest since 1969. They were expecting a much higher number than 199,000, which is the lowest since 1969, showing the economy, labor force to some degree, seems to be coming back. We continue to see supply issues. And so it's a question of how long these supply issues are going to last to impact enough price inflation towards the end of the year. One of the key elements that I want to point out here in terms of the way that I'm trading gold, silver, and Bitcoin basically is the fact that Chairman Powell was renominated for a second term, and the markets took it bearishly as a bearish sentiment. Now, if we go back to June of this year, when he first mentioned the talk, or started talking initially about continuing to talk about tapering or interest rates, nothing was done regarding interest rates, but the market reacted bearishly and it made a top in June across the board, except for stocks, of course, that regardless, they just continue to rocket up, short of any minor corrections. And so it appears that the Chairman Powell renomination has been interpreted by the markets in general, the commodity markets in general, the metals, digital assets, as a potential bearish indicator due to the expectation that they will increase interest rates. And so we've seen a substantial correction across the board, and particularly if we focus on the metals, we're back down under 1800. Silver is at 23.57. We're looking at the March contract now as December becomes the delivery month. And the short side of the market was able to bring prices down from 24.95 all the way down to a low that we saw of 23.33.50, and we have seen buyers step in. Now we're moving into a period that essentially is a cyclical turning point. As we end this month, options deliveries will be off the board, and what we want to see is basically the open interest and the volume on the short side of the market here as we come into next week. My expectation is that a lot of the short selling that was done was covered on this correction, and potentially the decline that we have seen as a consequence of Chairman Powell being renominated is already discounting higher interest rates. Markets always get ahead of themselves, and so I would not be surprised that this correction that we have seen with the metals coming down below 1800 might be putting in or stepping into the bottom or making the yearly lows. And when we take a look at where the price action is taking place, what we identify is, first of all, that the weekly numbers are extremely oversold. It's below the B2 level, so the weekly program is neutral. The weekly algorithm is neutral. And we're looking at the daily data on the left of the chart that we're trading for day trading as of now, and we're using this data to identify where the market is on a short-term basis. And what we see is that the algorithm has identified the level of accumulation of supply that it tells you where you want to be looking to accumulate supply, and it's in that 1788 to 1771 level. So the daily data is showing me basically an earlier level of support in terms of where the expectations would be of high probabilities that if we get this signal activated by the market trading above 1788, we're going to start to see the reversion unfolding. And if we do get a close above 1788, then 1819 becomes the target, and we begin to engage once again the daily algorithm on a close above 1821. Bitcoin on the daily, it's trading below the average price of 57,147, so it's in a bearish price momentum. And the target below is 54,648. Unless the buying takes place at a higher level and the market closes above 57,147, that's going to add the bullet. Silver. Once again, like gold, is neutral. The algorithm is neutral on the weekly signal by 2 of 2403, and is even oversold to the daily numbers that you see here, 2362, which is the buy 2 level. So if you're coming in here, for those viewers that are just joining me, we have no positions right now. We're looking for trading signals. We're looking for trigger points, and that would be in silver on a close about 2362. And what you see here on the chart is even applying the Fibonacci retracement. The market came down to a 50% Fibonacci retracement, reverted from there, almost traded through 2362 and reverted into this bottoming formation that we're waiting for it to resolve and to give us a much clearer picture. But for right now, it's neutral. Buy a close about 2362. Very clear. We don't need to worry about anything else on the day trading format. As a consequence of the unemployment numbers, we're looking at the 10-year note rising to about 167, 168, up another 1 to 1.5 ticks. So it has been a bullish factor for the economy, but obviously putting pressure on interest rates. And so the real issue with regards to interest rates is that obviously as the debt continues to increase, the long-term rates or the 30-year bond rates cannot go up. And so what I believe is happening here is they are allowing in the short end of the yield curve, which is the 10-year note, to invert to the 30-year bond, or to invert the yield curve and allow short-term interest rates to rise and maintain the 30-year bond or long-term interest rates capped. Which is where, if this economic growth continues, if we continue to see this incredible record demand and putting pressure not only on price inflation, but also beginning to see that the economy as a whole also is dealing with wage price inflation. People are demanding more money from the economy. And obviously, the ability to print all this stimulus, I believe, has created this false sense of security that, we can print our way out of this. We can print endless amounts of money. When I hear those comments, I see basically that most people do not understand the implications of printing money to the underlying currency that we're dealing in. And yeah, we can print, endless amounts of money, but the currency implodes. The purchasing value of the currency implodes. And it causes basically a reduction in lifestyles. Everything costs more. People do not have access to the materials that are necessary even just to survive. When you take a look at, for example, oats, which is basic food source, has gone up from $2.83 a bushel back in December. This is back in December of last year. December 2nd, it was trading at $2.83. And the high that was made was $7.79.80. We're talking about oats. We're talking about oatmeal. We're talking about basic food. Has increased incredibly since last year. You're looking at corn going from 414 to 735, and then obviously we've seen a correction as of May of this year, which is pretty much into the time that I just mentioned to you earlier, that we had this June meeting, which essentially collapsed all the markets. Now, what I'm beginning to see here and what I'm looking for is this kind of formation where you get a major bottoming formation taking place and the markets are breaking out. And we're approaching now pretty much a 38% retracement from this correction. And I believe that in looking at the markets here in general, just the charts, it looks like we're building the beginning of the third leg in most commodities. Coffee's trading almost at 250. So we have gotten major buy signals in grains as well, confirming basically this strength in the economy and the strength in demand that I think is common into the economy, that essentially is going to continue to find shortage of supplies. Even though there is an acceleration to relieve that pressure, it's a question of, how much demand is in the market in relation to supplies, just going back to the basic law of economics of supply and demand. So commodities, grains, have bottomed and are looking to resume their uptrend. And I'm looking at the longer term effect, obviously, as we move into the end of the year. What are we looking at for pretty much where are the trading opportunities here? And so we are in the metals, we're in digital assets. We're looking at grains. And building a position, expecting again a continuation of this major bull market that we were in prior to this June announcement, or this rhetoric that I call, which was pure talk about tapering or raising interest rates. The one thing that's happening obviously here is that we're getting tapering possibly starting on January of this year. We only had a couple of months here of this year so far left, but it's going to be a question of whether they are going to taper 15 or 25 billion a month. But as far as interest rates are concerned, I think it's a little too soon to see whether it's necessary for interest rates to go up. But nevertheless, the market has already discounted that information. So my feeling is, and what I'm preparing for, is that if the pressure of the economy continues in terms of price inflation, in terms of monetary inflation, in terms of wage inflation, it could be that the markets have already discounted that if we do see an increase in interest rates. Very much like we saw back in 2012. 2015, 2016. That was the bottom of the gold market, and it was the first time that the Feds raised interest rates. And I think this correction here that we are seeing has allowed the short end, or I would say the short sellers, the paper short sellers in the market here, which are essentially the central bankers, a last chance to cover the short positions. But if you noticed here, they're not succeeding in breaking the market lower than the first time back in June. In fact, it's a higher level. And what it's building is an uptrend or gamma formation, which is extremely bullish. Right into a level where the algorithm is recommending this is an area of accumulation of supply. This is where you're going to be looking for a reversion to unfold. So you want to buy gold on a close above 1788. Using the daily data. The weekly data is neutral. And the area of accumulation of supply is between 1788 and 1771, where the algorithm is telling you that's the area where you want to be looking to add or accumulate to your position.